In the realm of wealth accumulation, rich individuals often employ a sophisticated understanding of debt that transcends conventional thought. Rather than viewing debt as a burden, they see it as a powerful tool that can expand their financial horizons. This distinct perspective enables them to capitalize on opportunities for growth that would otherwise remain unattainable. For instance, affluent investors may utilize debt to finance real estate acquisitions, allowing them to own multiple properties while leveraging someone else's money to fund much of the investment. This strategic use of debt is beautifully illustrated through the concept of leverage. By borrowing funds to invest in high-value assets, wealthy people can amplify their returns significantly. Suppose an investor purchases a property valued at $1 million by only putting down a fraction of that amount as equity. Should the property appreciate, the return on the initial investment becomes exponentially larger as equity grows in value. With market fluctuations, they may even decide to refinance, pulling additional cash for further investments without liquidating their existing assets. Moreover, time is a critical factor in how the wealthy utilize debt. They often prioritize long-term investments with higher yields while managing short-term liabilities with cash flow generated from their investments. By doing so, they create a cycle where the income produced from their investments exceeds the cost of the debt incurred. This dynamic not only allows them to build wealth efficiently, but also provides a safety buffer against the vicissitudes of economic slumps, ensuring that their financial foundation remains robust. Additionally, the rich are keenly aware of interest rates and debt structures. They may opt for low-interest, long-term loans instead of high-interest options, effectively reducing their financial strain. By distinguishing between good debt, debt that generates income or appreciates, and bad debt, which tends to diminish wealth, they can orchestrate their financial moves to yield maximum benefits. This nuanced approach fosters not just wealth maintenance, but also growth, illustrating that debt, when used wisely, can be an ally in the pursuit of financial goals. In conclusion, the strategic use of debt among wealthy individuals reveals a critical component of their success. They harness its potential to invest, grow assets, and generate income while maintaining a clear-eyed view of risk and reward. This method not only underscores their financial acumen, but also serves as a blueprint for others seeking to understand the art and science of wealth building. When managed effectively, debt transforms from a feared obligation into a propelling force driving financial prosperity.